Hello, everyone. Welcome to InvestStream. I'm Pankaj, and today we're doing a very special episode. We're turning the tables. I am not going to be your host today. Instead, our host is going to be Ritesh Bansal, a friend of mine from a long time ago. We have been through a couple of companies, a couple of startup adventures as well, and he's going to be interviewing me about my journey. So, Ritesh, welcome. Thank you for doing this.
Absolutely. Glad to be here. So 20 years ago, if someone had asked me, what would Pankaj Jain be doing in 20 years? What you're doing right now would be not even my last guess.
Probably not mine either. It definitely wasn't something I thought of as a career path or as something that I would be interested in, or even knew that it was a career path or a just an option to do in life, right? Like, we didn't know about any of this stuff back then, and we also didn't have TechCrunch and Slack and WhatsApp or Twitter for all this information to flow around as easily as well. So it's been a long and circuitous journey for sure.
It's been a remarkable journey. I mean, coming from a somewhat of a tech background, even back then. From Carnegie Mellon, I knew of VCs, right? But in a very sort of abstract sense, I dealt with a couple of them in a couple of the early startups that are in the 90s. But you've had a remarkable journey from our days at Long-Term Capital to today. And for me, it's just a incredible story. So let's dig into it.
Absolutely.
And find, what are the twists and turns that you took to get here, right?
Well, that's why we're here. Let's do it.
So let's start at the very beginning. You grew up in New York City.
So I was born on this day in this town. I was born in India, actually.
All right.
Let's not go back that far. No. So I've lived in New York City my whole life, except for a couple of years when I moved to India, grew up in the city. Went to high school in Manhattan. Went to college in Manhattan. Worked in Manhattan after graduating college, and
you went to NYU Finance.
I went to NYU. I did a double major in finance and information systems. Didn't really know that engineering was computer engineering or software engineering was a career path at that time. It was very foreign to definitely to my family. So was finance for that matter, but. It was just not something that we even knew. And like even most of my friends growing up, other than a few folks in high school, most of them didn't really even have computers to work with. I mean, we had computers at school, but we didn't have any computer programming classes back then in school. So I went down the path of finance and eventually added a double major information systems, partly because I was interning at Merrill Lynch, and the stockbroker that I was interning for, it was an unpaid internship. He wanted to build a database. He wanted to build a database to send out a newsletter to his clients. Today you think about it, it's like it's no big deal, right? It'll take you 10 minutes to set something up on MailChimp. Back then it was a chore. You have to do a mail merge. And when he says newsletter, it wasn't a digital newsletter. These were actual letters that he was printing out and mailing to his clients, right? So I asked, he's like, do you know anybody who could, build this for me? I asked him, I said, are you paying to have this built? He said, yeah. I said, how much? He said, I'll pay $5 an hour. I said, I'll do it. He said, you know how to program? I said, no, but I'll figure it out. I walked out of work that day. There was a computer store a couple of blocks away. I walked to the computer store, and this is when you actually bought software off the shelf. There was Microsoft Access 1.0 had just come out.
3.5-inch floppy disks.
3.5-inch floppy disks, and it was this big box. It was probably like 2,000 pages of manuals. And it wasn't just manuals, but it taught you relational database programming. So that's how I learned how to program databases and how to build databases. So I started building it. I got really excited. I thought this was really cool. And so then I added information systems as a major.
And then after NYU, you went to JP Morgan.
I was at JP Morgan for a couple of years, 2 years, almost to the day. I was in the global technology and operations division of JP Morgan. This is pre-merger.
Pre-Chase.
Yeah.
Pre-Chase.
So this is the old white glove JP Morgan. And it was a very different organization than it is today, much smaller than it is today as well. And so one of my earlier roles was to focus on network chargeback systems. So, which was bizarre to me. I didn't really understand what any of that meant, but it was a way for a cost center within the bank to look like a revenue center, because you're charging other divisions and other groups in the bank to use the wide area network, which was weird, but this is something that they had to do at that time. And, it was interesting, but this is around the time that JP Morgan kind of looked at who they were as an organization and said, look, our core is finance and financial services. Technology is not a core aspect of our business. And they decided to outsource all of this. And this is something that a lot of companies were examining in the mid-90s.
Right.
They created this Pinnacle Alliance, which was a combination of IBM, Bell Atlantic, or maybe it wasn't IBM. I think it was Bell Atlantic, Accenture, or back then it was called Anderson Consulting, AT&T, and two more organizations. There were five, CSC and one more, I forgot who. So there were five organizations that were going to take over all aspects of JP Morgan's technology. So that included project management, that included wide area networks, that included local area networks, it included application development. So everything now had to be pushed out to these five different organizations instead of internal. And I was now going to continue doing the same job I was doing, but my whole team was now going to become employees of AT&T. And so I said, no, thanks. That's not what I signed up for. So I started looking for a job, and that's when I heard of LTCM and started going through the process of interviewing at long term. It was a long process. It took quite a few months. And, I basically said, look, this is where I want to work. I don't want to even interview anywhere else. This is where I want to go. And part of it was because I had read Liar's Poker when I was in high school.
We all had, yeah.
Yeah. Well, yeah. Well, most of us read it when we heard of LTCM, right? I read it. Right. I read it in high school. Probably 8 or 9 years before interviewing at LTCM, and that book had a huge role to play in my decision to not go into medicine or not go into other family type businesses, but instead go towards Wall Street. So it was that book and the movie Wall Street that kind of pushed me in that direction. And, as a sophomore, junior in high school, my dream was to work at Salomon Brothers on the mortgage desk with John Merriweather. Now, fast forward 9 years, and here we are in 1996. And I'm interviewing at LTCM, which was John Merriweather's firm, as you know very well, since we worked together there. So to me, it was like a dream come true to have the opportunity to work with some of the best minds on the planet in finance and pioneers of modern day finance, right? Everyone from John Merriweather to Myron Scholes, they've all been pioneers of modern finance. And
just for our listeners, long-term capital at its peak was probably the most storied hedge fund in finance. And there was a cover of Business Week. I think I had it somewhere where they talked about, actually I have it right here. I'll share it.
Share the screen.
Yeah.
I don't know if JM would approve, but go ahead.
Yeah, we don't work for JM anymore, so. So here we are. So this is the cover of Business Week. I think it's around 95-ish, 6-ish maybe, right? And this is, I think Merton, right? Robert Merton. He's
Bob
the
Merton.
Nobel.
Yeah,
Bob Merton. He won the Nobel Prize in '97, I think.
Yeah.
in economics. And we
Yep.
had two of these Nobel Prize winners in a firm of 180 people. Anyway, that was long-term capital. We all paid a very high premium to work there. I remember taking a 50% pay cut from my next offer to come work at long-term capital. And remember, I was coming out of school, so I was a broke undergraduate with a lot of loans. And
Yeah.
I took a 50% pay cut because working at long-term capital was like being the water boy on the Chicago Bulls, at the peak of Michael Jordan. It's like, why would you not do this?
Yeah. Yeah. Absolutely.
Right. So you were LTCM, you were there for 2 years, you were a
Well,
technology associate.
I was at JP Morgan for 2 years. I was at LTCM for about 3.25 years.
3.25 years, okay.
Yeah.
And we overlap there. That's why we know each other.
Yep. 96 to end of 99.
Okay.
Well, we both left at the end of 99.
Right. And then you went to probably one of the most famous success stories in in New York City startups, New York City FinTech startups, back in the late 90s, which almost nobody knows about, GlobeOp. So tell us a little bit about GlobeOp, how you got there, and what, the journey there.
So, they weren't called FinTech startups at that time.
There was no FinTech.
Yeah. I remember in one of the earliest meetings that we had, GlobeOp was being labeled as an application service provider, or an ASP. That was the common term that people used at that time, right? And the idea was, let's spin out of, well, not even spin out. We're all going to leave LTCM, and let's recreate the infrastructure that LTCM had, right? We all had expertise in technology and operations. So let's rebuild a new technology and operations platform for multiple hedge funds to use, not just LTCM. And LTCM was not a client of GlobeOp, but we started GlobeOp at the end of 99. And, it was probably not the most optimal time to go start a financial outsourcing back office type of company. This is right in the middle of the dot-com bubble. Like, everyone is starting up a company and taking it public within weeks, and there's just money all over the place. So hiring people was a big challenge, right? Like, almost everyone who started GlobeOp was a former LTCM employee in the beginning. So I think out of the first 15 people, probably 2 or 3 were not LTCM employees. And, we all left one by one and kind of joined LTCM and did this. We built the business from nothing. Our first customer was a spin out of a proprietary trading desk in Citibank in London. They prepaid $1 million, so that was our seed funding. Right, we didn't raise money out of the bank. The founders put money in, and we had a client prepay. And our job was basically to get this client separated from the mothership and get them operational. So all of the technology that they needed, all of the operations that they needed, this is what we did, right?
So you were one of the first employees.
Yeah.
And you had equity in the company.
Yep.
Right. Okay. So you were one of the founding employees, basically.
Yeah. I mean, I was one of the founding employees. I think, unofficially, I was probably number one. I wasn't on the payroll. There was no payroll set up at that time. But, I was going to meetings in the city and, figuring out what our technology stack is going to be, what our operations might look like. And, slowly over time, I got added to the payroll. Took, I think, 2 or 3 months for me to get onto the payroll, but I think I was probably employee number 8, 9, something like that. Had equity in the company. So I did not have options in the company. And this is a really important part of my philosophy and my perspective on founder dilution and rewarding employees, especially early employees. All of us who joined GlobeOp in the beginning, whether you were a very junior person or a very senior person, didn't matter. the founders had the equity. They created a pool of equity, and they created different classes of stock. And essentially, all of the employees were allowed to buy stock in the company at par value. So we didn't have stock options with, convoluted
expirations and strikes and that.
No, none of that. We had to purchase our equity at par value. So I paid $50 for my equity, or $55 for my equity. I had to fill out. I forgot what form it was, but I had to fill out a form and submit it to the IRS by a particular date. So now it was an investment that I had made in the company. So it would be taxed at long-term capital gains rather than as income, whereas options are typically taxed as income, right? And so, we had a huge opportunity to put in a very small amount of money to invest in this company, have some ownership in the company. And as the company grew, we had a vested interest in wanting to see it succeed. And, all of us, whether we were founders or not, we approached everything that we did at the company as founders. We had our problems, we had our challenges amongst each other and politics and all of that, just like any very fast-growing organization might. But we still all had a very singular vision of what GlobeOp should be and what direction GlobeOp should take, and what my role in allowing that to happen is going to be, right? So that was an incredible journey. 1999 to 2004 was, a rocket ship. I mean, we built a real business. We went from having nothing, having one client who wasn't even in business, to having, I can't remember exactly, but when I left, I think there was about 170 different hedge funds that were on our platform. I don't remember the exact numbers, but I think there was somewhere around 30 billion of assets, 30 or 50 billion dollars of assets that were flowing through our systems at that time. Some of the really popular names in the hedge fund world were customers at some point in time of GlobeOps. It was an amazing ride, but it was also a very difficult ride, right? Like you were no longer sitting in the front office dictating to vendors what needed to be done. You were the vendor.
You were the vendor.
Yeah, and
you were actually the one they were now giving marching orders to.
That's right. And
right.
If something went wrong, your neck was on the line because
there were big numbers involved.
That's right. Right. Especially when you're doing all the accounting, you're doing the operations, risk management is run off of actual positions. So there's a whole domino effect of things that happen based on what we did as the books and records of these hedge funds. And, it was a very stressful time. It was a very difficult time. I tried to quit multiple times, partly because of my health. The stress had taken a significant toll on me. My doctor said, look, this is everything that you're having to deal with is purely stress related. Decrease your stress and you'll be fine. Keep doing this and you're going to end up in a grave. And so I tried to quit a couple of times. I was like, look, my doctors are telling me I'm going to end up dead. Tom Deegan, who you know very well also,
who was one of the founding partners.
He was one of the founding partners, and at that time he was COO of GlobeOp and my direct boss. I went to him and said, "Look, Tom, I got to go." He basically took my resignation letter, folded it up, stuck it underneath his keyboard, and said, "All right, it's fine. We'll talk later." I said, "Oh, okay." And I don't remember. I think it was like I gave him a month's notice or 2 months' notice or something like that. And he came. By the way, this is not the first time that Tom was my boss. Tom was also my boss at LTCM.
Right? At Long-Term Capital, yes.
Yeah. So we had a long relationship of working together, and so I went back to my desk, did whatever I did, and the weeks are counting down. I'd see Tom, would talk, but not about me leaving, not about transitioning my work or anything like that. Just stuff. And, time flies by. I'm like, Tom, you know, we got a week left. Don't you want to transition stuff over to somebody? You know, he's like, listen, I'll tell you what, why don't you go part-time for the summer? Come in 2 days a week, and the other 3 days a week, just be on call, right? If something goes on and we need your help, just be available that we can reach out to you and just call you. I was like, all right, you know, that's fine. And he's like, it'll give us time to like transition stuff over to other people. I was like, okay, fine. Summer rolls through, and it's fine. You know, I go in 2 days a week, do my thing. September rolls around. I'm like, hey, Tom, summer's over. You know, who's taking over? We still don't know who's, you know, who should I be transitioning stuff to? He's like, hey, listen, by the way, we have this other group that is in needing some help and need somebody to take over. Would you mind taking over this group? I'm like, Tom, I'm trying to decrease my stress, not add to it. I'm walking out the door. Instead, you want to add another team for me to handle. And it was a very problematic team that was nobody else wanted to do it. So he was asking me, hey, you want to take over? I was like, I don't even know anything about this. This was pure financial operations type of work, right? And data. So that was, you know, I was like, all right, fine, I'll do it. I'll try it out. And look, if my health continues to suffer, I got to go. He's like, okay, that's fine. And I took it on, and it was a lot of interesting things for me to learn very quickly. You know, because this wasn't a team that had a mission to succeed with. This was a team that was failing every single day. And, you know, I had to now find out, how do I fix this? And, you know, at that point, what am I, 26, 27, something like that? I had no experience managing such large teams. I had teams before, but, you know, it was 5, 10, 15 people. Now I had teams across 3 continents that I had to manage, and it was like 50 people, and all of them have their own ways of doing things, and they're all fighting with each other and arguing. I was like, great, here goes my stress, right? But to me, it became a very important learning point, not from the mechanics of what I was doing, but more about loyalty. And, you know, like, Tom and I had worked together at LTCM. We worked together at GlobeOp. It was a great working relationship. And, you know, he said to me, he's like, listen, if you leave now, you're going to leave a lot of money on the table, right? Your equity vests over a certain amount of time. You leave today, you're going to leave a lot of that equity on the table. Stick around for another year, you know, or 2, something like that. I don't remember exactly how long it was, but another year or 2, you'll vest all your equity. You'll get other stock options that we're going to implement in the compensation plan. So you'll get more and more of this company. And, you know, that was the loyalty that he was showing to me, right? As somebody who worked for him, saying, look, stay here. It's going to be good for you, right? We'll work with you to figure out your health issues and solve that. But keep doing what you're doing. You know, solve these problems, help us, and you're going to make a lot of money, right? Not so many words, but that was kind of what was being communicated to me. And that's between LTCM. I mean, you remember the story at LTCM when at the end of August in '98, when Warren Buffett and Goldman had sent the offer over, and JM and everyone called everyone out onto the trading floor and said, hey, we're not accepting this offer, and this is why. And, you know, all of you are going to get paid out through the end of the year immediately, right? That was a show of loyalty that the partners showed to the employees, right? And, you know, so I kept getting these experiences that really kept showing me the value of loyalty, which is in sharp contrast to a lot of the things that I've seen and read in Silicon Valley, right? Like hire fast and fire faster. That's completely the opposite of what I experienced and lived through, right? Not just with myself, but with others also. Like, I had never fired anybody until 2008, right? And, you know, I started my career in 92-ish. I'd never fired anybody in my life. I worked with those people and said, hey, what this may not be a job that's suitable for you. What could be? Let's try to figure that out, right? And like let's move people around if we need to. That's what I learned, right? Like loyalty to people, and it goes both ways. So that was a really, really important aspect of the first couple of years of my career that has stuck with me to today, right? And that's what I try to do for people that I work with, and I like to see that same thing in return, right? Like that, loyalty is a two-way street. It's not a one-way street. And when it is a two-way street, it can be very rewarding for both parties or multiple parties.
Yeah. So, just to shore that point up, my experience working with Tom, and I recently worked with him on a small project he wanted some help on.
Yeah.
And it's now been close to 25 years, right? And one thing I learned from Tom was invest in people. Never, ever let them fail. And whenever I have personally applied that, it has paid incredibly rich dividends. I mean, people just show up and they will fight through anything to not let you down if you invest in them.
Absolutely.
And that is something that Tom taught me, how to be a good coach.
Yeah.
Because Tom never bosses anybody around. He just tells them, hey, you gotta figure this out, and you gotta solve this, and he just leaves.
Yeah.
And he just take you out in the evenings, and just feed you a lot of booze, and just hang out with you.
Yeah.
And take care of everything. So that is I think a very key lesson. And even today, he reminds me, hey, if you had taken my offer, come to GlobeOp, you would have walked away with, several $1 million, some number he throws out. And I'm like, can we not talk about that, please? It's been 25 years.
Yeah.
You remind me every single time. So that's Tom. And I think it's a very, very valuable lesson. So you were at GlobeOp, and I think, I have this, they were bought out in, let me see if I can share this.
Well, GlobeOp went public first in 2007.
They went public in 2007. Okay.
They went public in 2007. And I had left at the end of 2004. They went public in 2007, and then in 2010 they were bought by SS&C. So it's called SS&C GlobeOp today.
Correct. So that was almost $1 billion, right, back then?
Yes. So I forget the exact numbers, but GlobeOp I think went public in 2007. On the London Stock Exchange at somewhere around a $500 million pound valuation, if I remember correctly. And then they were bought in 2010 for a little over $1 billion.
Right here, yeah. And they closed their acquisition. So it's really interesting that was the first ASP SaaS company, really.
Yeah.
Infrastructure, operations as a service.
Yeah.
And there has been similar firms in the financial space, but not a whole lot. I mean, finance is really done very similar to the way it was done 20 years ago.
Absolutely. But I think what you're on the enterprise side and specifically Wall Street, yes, I think you're right. But there have been a lot of GlobeOp clones that have popped up over the years. Citadel launched one around 2004, 2005. No, it was a little bit later than that. I think it was 2007, around that time when Citadel launched a GlobeOp clone. There's a couple of others out in Jersey. I think some of them have been acquired. So there has been that type of, back office, middle office, application, software stuff happening on the Wall Street side, but it doesn't get a lot of attention. It doesn't necessarily get a lot of venture funding. And it's kind of a black box, and it's very separate from the whole Silicon Valley ethos or the whole startup ethos, right? But I think we do see on the consumer side, like the SoFis of the world, right? They are similar in nature in the sense that they're taking complex financial things that have to happen for an organization and allowing them to push that out to an outsider and say, okay, you focus on this and provide it as a application and as a service to our employees, right? So I think we're seeing more and more of that on the
consumer side.
B2B to C is what I would call it.
B2B to C, yeah. But B2B finance is about 5% of the U.S. economy.
Yeah.
Right? So some number of very large dollars that are mostly being done in a legacy way. So let's continue. So you left GlobeOp 04.
Yeah.
And then somehow you ended up in New Delhi. What happened there?
Yeah. Yeah, I left GlobeOp and just landed in Delhi. No, I left GlobeOp at the end of 04. Again, Tom and I started working together in early 2005 in tech startup. That was an interesting experience. It was a great learning experience, not a great financial outcome. But after that, I kind of decided, well, do I go back to Wall Street and just get another job? Or do I look at doing something else? And, podcasts today are very popular and everybody's talking about them and listening to them. Nobody listened to podcasts back in 2004, 2005. I got hooked on two podcasts in particular. One was Venture Voice, which was Greg Gallant here in New York. And the other one was podtech.net, which was based out of the Bay Area. I think it was Ryan something. I can't remember his last name that started these. And these were all about startups, right? It was all about building something. And I got really excited about that. And I started working on an idea that I had. And a lot of it, funny, it revolved around podcasts. So it started with that and kept evolving over time. And, I tried to get some developers to kind of start building out this, essentially was a reverse auction platform for transcription. And search engines couldn't read audio at that time. They still can't, but transcription is much easier today than it was, automated transcription, whereas back then it wasn't. And the idea was to build a auction platform where people can just say, hey, I have this length of audio, here's the topic, and I'm willing to pay X number of dollars per word or something like that, or per minute of audio to have it transcribed. And at that time, I found that there was a whole bunch of medical and legal transcriptionists that suddenly didn't have as much work as they used to. And they were basically sitting on the sidelines in places like the Philippines and India. So I said, well, here's a marketplace that can be created. And that was the idea. And it kept evolving. And when I went to India to kind of meet some developers and see, can we put a team together and start really ramping up development of this, I met a bunch of other folks, and I started seeing another problem, which was, everybody in the middle class was looking for people to help them with work, right? Whether it was a nanny or
wait, you were now living in New York, or you moved to Delhi?
I was living here. I was living in New York, but I was visiting India in late 2006. And, that kind of introduced me to some problems that existed in India. And this was like, there was one side of the equation, which was people that needed people to work for them.
Household help, drivers.
Yeah, unskilled labor.
Yeah.
Right? And then the other side, which was these groups of people that were looking for jobs.
But this is 06, 07, so yeah. They don't really have broadband.
No, there is no broadband.
They don't have smartphones. They don't have 3G. They don't have 2G.
So, yes, you're 100% correct.
They don't have phones. Like, they have cell phones, but they're very expensive still. Because this is after the first Reliance, but before Geo.
Yes. So cell phones are expensive. Service is still cheapest in the world. And almost no one had even GPRS on their phones, right?
Right.
They had no data. I was, one of the few people that had data when I was there, even on vacation on this little expedition trip to decide like, hey, how do I build up a team over here? And people are like, you want data on your phone? What are you going to do with data? Well, there's email, there's stuff that
this is really, really early to be doing anything in India.
Yeah. And, I just got really excited about the problem of like, hey, how do we help the underprivileged get better quality jobs, better pay, and over time, how do we help them improve their skills and get the best job for the skills that they have, right? So that became a problem that I really wanted to solve. Like it just resonated with me, and I was like, this is like, it could have massive impact.
But that problem is still not solved here.
It's not solved anywhere.
It's solved anywhere, right? And with all the infrastructure, so doing this back in 6-7 in India was,
it was pragmatic. It was crazy.
Yeah, it was trying to build a greenhouse on Mars today.
Yeah. In hindsight, it was the dumbest thing to do, but it was. I think the thing that resonated with me when I was there was that the plight of the poor there is so much worse, right? And that affected me in a way where I was like, look, can we help? Can we figure out ways to improve their quality of life, even marginally? If we can, it can have a massive impact for so many people, right? And just the sheer numbers was another reason why it was something that I started getting very passionate about. So, I convinced my wife to quit her job, and we moved to India in early 2007 to do this. And, fast forward about 6-9 months, we still couldn't get a business up and running. The sheer bureaucracy of everything, the number of scams that people run, we were learning the hard way that this is not going to be easy.
So to this point, you had never lived in India, but you had visited occasionally.
Yeah. I'd visit every couple of years, see family, and I didn't know anybody in India except for extended relatives, right? So
who are all not in the tech space.
No, nobody's in the tech space. And so it was really challenging. Honestly, there wasn't a single day that went by where I was like, what are we doing here? Why don't we just go back? And my wife was really great about it. She's like, look, give it some time. It takes time. You wanted to do this. Just keep doing it. And she was extremely supportive. She, through various networks, started doing some work over there, and eventually wound up at Mint, which is a business newspaper over there. And they had plans to launch a television station. So she started working with them on that whole thing. That took a whole bunch of twists and turns, but essentially she was working. So it was like, okay, great. I can focus on what I need to do. And, her career was going great. It was like, whoa, rocket ship. And it was on the right path. So, now we were in this thing where like the startup was really struggling, right? I was struggling to hire people. I was struggling to find people. I was struggling with the most basic things that I didn't know about doing business in India. I didn't want to raise money. I had no plans to raise money. My plan was to just bootstrap it to a certain point and then see, can I build a bootstrap business, or am I going to have to raise money from somebody? I didn't know, right? So I just said, I'm just going to bootstrap it to a certain point. So I was very frugal for 2 years, both in terms of living as well as where I'm spending money. So I had to be very
creative.
I had to be very creative, but I also had to be very quick in making decisions. Like if I saw somebody that I hired that really, and this was a big problem, didn't really have the skills that they had studied for on the interview. Like, people would ace technical interviews because they studied for them, right? But when you sit them down and say, okay, here's a real problem that we need to solve, get creative and write some code to solve it, they went nowhere. I had to fire people pretty quickly. And part of it was because I was bleeding money out of my personal pocket on two ends, right? Supporting my family, but also supporting the business. And so I had to make decisions to let people go relatively quickly. It's not something that I enjoyed. It's something that I hated doing. But I also felt like, the situation was very different in the sense that it wasn't just money that was coming out of my pocket. It was time that I was losing. And I wasn't seeing the same type of enthusiasm or quality of people at that time. Like nobody wanted to work at a startup, right? Like the only people who would work at a startup at that time were people who couldn't get jobs at Google or Motorola or Infosys, right? Like everybody wanted to work at a big company. Today, right. Startups are sexy, they're attractive. People like the smartest people in India want to either start something of their own or go work at a startup. That wasn't the case in 2007, 2008. And that kind of led me to getting involved with, organizing events and getting more people together.
So at this time, you had shut down the company.
No, I was still running the business until 2010, but around 2008, end of 2008, I said, well, I have this problem. I need a co-founder who really understands India and some of the complexities of doing business here, because I don't. I'm trying to figure it out as fast as I can, but I really don't. And I need to find somebody who can. So I need to get a mentor who can guide me through some of this stuff, and I need to find a co-founder. Couldn't find either. I found people that were ready to invest or found people that wanted me to come and pitch to Indian Angel Network and see if I can raise money. I said, look, I'm not looking to raise money right now. I want people that can help me, and I'm willing to give you some equity to help me and mentor me. But time was something that people weren't ready to give at that time. And so I said, all right, I have to find my way through this. And one of them was start organizing things, right? There weren't events happening at that time. There were some.
So you found there was no ecosystem?
No, there was no ecosystem at all. None at all at that time.
So you are in India where you never lived before. You're starting a business. You cannot find a network, an ecosystem. So you decide to create one.
Okay.
No, I mean it's just extremely audacious, right? Like, I grew up in India. I would not move there even if you gave me an immense amount of money to start a business. And I'm like, look, I love you, I love money, but thank you very much. I'm gonna stay in New York, right?
Yeah.
And I have run trading enterprises in India from here, and that was with very large hedge funds. That was a complete nightmare. We would happily pay someone $1,000 an hour to consult with us, and even that was a nightmare.
Yep.
And to move there, start something, and then find that, hey, this is not working because there's no ecosystem. So let me just go create one. So tell us about that.
So when you say it like that, it sounds like, you have to be extremely insane and have like a massive ego, right? Like,
I mean, well, one way is just, well, that's one angle. The other angle is saying, hey, there's a lack here, right?
Yeah.
The reason I was not able to start my company was I could not find these people, right? So what if I try to help bootstrap that? I think that's what you effectively did.
Absolutely. So,
right.
What started out as, it was not about creating an ecosystem. It was solving my personal problem, which is I didn't know anybody. I didn't know, I found recruiters. They were all terrible, right? And they were bringing me talent that just was not going to work. It was not going to get me where I needed to go. So, I had to find other ways of finding like-minded individuals that would be excited about disruption and creating meaningful impact in some way, right? And I had to figure out something. So I was like, all right, I met a couple of folks through, just going to different places constantly. And I started talking to some of these people. BarCamp, I don't know if you're familiar with it. Chris Messina started BarCamp a long time ago. It's the unconference, kind of in response to Tim O'Reilly's FooCon that he used to do, a very closed knit group of people. So this was more open to everybody, right? And so I got involved with a couple of folks. We said, hey, let's start organizing BarCamp in Delhi. So we did a couple of BarCamps. And
this is 08, 09.
This is around 08. Yeah, early and mid 08. And then, mid 08. And then towards the end of 08, we were doing another one. And this is right in the middle of the financial crisis. So Lehman had just collapsed. And, everyone was still like, the world is going to end. They're like, yeah, been there, done that. We've seen this story before in 98. And we were organizing BarCamp, and I said, hey, in addition to organizing it, I'm going to do a talk on the financial crisis and, just share a few thoughts on why this happened and what it means. So I put this deck together. It was supposed to be a half-hour speaking slot. And, even the folks that were going to go after me, they're like, hey, no, keep going. And turned into a full crowd of I don't know how many people. And it was about 2 hours of me just sitting there talking and answering questions about what led up to the financial crisis and what happened. Unfortunately, nobody videotaped it, so I don't have a recording of what I said. I have the deck up on SlideShare and all, but that kind of changed a lot. That moment changed a lot for me. Prior to that, I was another cog in the wheel that was just kind of running through this maze of individuals and people in Delhi, specifically just Delhi at that time, trying to find a co-founder, trying to find technical people to hire, trying to find not investors, but mentors that could potentially help me. And there was no real direction to a lot of this stuff at that time. So what it meant for me was I was just another person, just like everyone else doing this. But at BarCamp, things changed. By giving that talk on this topic that very few people knew about or understood, suddenly I became I won't say an authority, but at least somebody that knew something very different than most of the other people there. And this is around the time that I met Nikhil Pava, who was the founder of Medianama. He had just started Medianama at that time. And, he was at BarCamp. He saw my talk, asked a lot of questions, and wound up writing a post about my talk at BarCamp on Medianama. And, again, it was putting me more out in front and center in the local community. And people took notice. People realized that, maybe Pankaj can be helpful in certain things. So that's kind of when I got involved with folks from other cities who had visited that BarCamp, saw my talk, like, hey, we're doing stuff similar to this in Mumbai and Bangalore, and we're thinking about starting something called Startup Saturday. So like just, 10, 20, 30 people on a Saturday get together and talk about startups. Would you be interested in getting involved? So I got involved with them. We launched Startup Saturday in December of 2008. And the idea was like, hey, every month on the second Saturday of the month from 2 o'clock to 5 o'clock at the American Center, if you have anything to do with startups, if you care about startups, if you want a job, if you're building something, you don't even know what a startup is, you're just writing code, just come to this event. And, so that started building a community. It started getting people.
But you were organizing this. I remember you were like actually setting up the whole event. You were hiring caterers. I was talking to you and I was like, what is this guy doing?
No. So the catering and stuff, that stuff came later. That was Startup Weekend.
Okay.
Startup Saturday was much lower key. At best, maybe we would have some samosas and some chai for everyone that came to the event. And even that came much later. In the beginning, it was like, look, if somebody wants to sponsor and put some snacks out, great. We didn't charge anything for the event. It was just like, hey, just come and let's just get together and see who's doing what, who's working on interesting things, who needs help with something. And more than anything else, it was just like the fact that this was an event that happened on the same day, every month, at the same time, at the same place. There wasn't anything to think about. There wasn't anything to really let people know about. The only thing we really need to let people know about, hey, this week, so-and-so is going to come and talk. So like one of our earliest speakers was Bipin Singh, who was the founder of MobiQuick, right? Which is, big FinTech startup in India today. They started with mobile phone, prepaid mobile phone recharge. And it grew from there, right? So, there was a lot of early speakers that we got in that were just starting up at that time. Kunal Bell for Snapdeal, he was a speaker in 2010. So the idea was just to get people together on a regular basis. It wasn't about building an ecosystem. It was more about building a small community, right? And that's really how I approached it. Was like, look, let's get this started. I realized that I was different from most of the people there, and rather than trying to hide my unique background and hide it away and
blend in or something.
Yeah, I should just let it out. Like, look, I'm from New York, and yes, I speak Hindi with an American accent, and because I've lived in New York my whole life, and I want pizza. I want real good pizza, right? Like, just this is who I am, right? And that made a big difference, and that allowed me to do certain things that would have been harder for other people to perhaps get done.
Right. Because the thing that's very amazing to me is in that culture, right? In that, especially Delhi, for example, community building is not an onus, which for me is truly astounding how you, right, an expatriate, for lack of a better word, was able to go there and create this ecosystem, right, which you found severely lacking. And you said, look, no founder should go through this. I remember talking to you back then, and you're talking about, like, hey, there's not even a simple meetup here.
Yep.
Right?
Yep.
And that's about the time that NYC was really taken off as a startup destination. Right?
Yep.
And you urging me to go to all these things because there's nothing here.
Yeah.
And you said, basically you were building it, and you would not say that you were building it, but I believe this guy is building it, right? One way or the other, he's pulling it together, and that was truly impressive. And I don't think anybody else, somebody local, could have done that. It would have taken.
Well, to be fair, there were plenty of locals that I was working with at Startup Saturday, right? There were at that time, if I remember correctly, 5 cities across India. We started with 3, Delhi, Mumbai, and
you would fly there for these things?
No, I wouldn't. They were just local. There were 16 co-founders for Head Start Network, and that's what Startup Saturday was. By 2010. I had shut down my startup at that point, and I said, okay, what's next? And I really didn't know what, should I look for a job? Startups were.
And what made you actually, kill the company? What was the decision point?
Oh, there was a whole bunch of things. I mean, my startup journey was probably another whole hour-long episode on just what I learned about myself, and mistakes that I had made along the way. And, some mistakes were in my control. Some were just a function of the environment that I was in. And, some of it was stuff that I had already known or I had realized relatively quickly, but I wouldn't acknowledge. Like I probably knew about 6 months to 9 months in, after hiring my first couple of employees, that this was not going to work. I think I knew that, but I just didn't want to admit it to myself. And it was more like, no, we're going to get through this. We just got to keep pushing. We got to persevere and get through it.
But what did you see in the market? This, as a fellow founder, right?
Yeah.
What's very interesting to me is, when do you pull the trigger?
Yeah.
What is that signal that tells you this? Whether it's a product, whether it's a market, whether it is a whole venture, what is it that tells you that, hey, this is not going to work and we should end this product?
This much traction.
Okay.
Right? When you're getting zero traction on it, you're not doing something right. And there's a combination of a terrible marketing job, right? Just like really bootstrap marketing, like telling people I know, hey, try this out. Started with that, but the product was very half-baked. And, there was problems that we had on the supply side, right? There was a whole bunch of operational issues that I had to deal with that I wasn't prepared for and I didn't have the manpower for, right? And I didn't know how to solve these problems. Like, some people said, hey, just pay off the cops. I'm like, I'm not paying off the cops. I don't know.
But you got to pay off the cops. Come on.
Yeah. I don't know how to do that. Right. Like, because it was like, there's no such thing as a background check in India, right? There's this thing called police verification, which is basically saying that, hey, this person whose information you sent us has committed a crime somewhere in the country at some point in time. And, we found that we were never getting any negative responses back from the police. It was an operational nightmare because we had to go to each police station in each local district or whatever they call it in India where people lived, right? So what, it was confusing because it's like, hey, all right, the demand side is in this part of the city. The person who's applying for a job there is in that part of the city. He's the person or she's the person who's the information we have to collect and get a verification done on. Do we submit it where the demand is or to that part? So it was like all these logistics things that were very expensive and very difficult to figure out. So my burn was increasing rapidly as well. At some point I realized, I was like, look, what we're doing right now isn't working. It's just not. So let's just stop and let's pivot a little bit. So I said, okay, let's try to pivot this to professional services. So like an Upwork, let's try to do that, right? Build an Upwork type of thing. It was basically the same platform. We just have to reskin it and change some of the back end stuff. So we tried that. But most freelancers and folks in India didn't want to use it because they were using the ones in the US and they were getting paid in dollars and all that. So that was also kind of a 2-3 month experiment that we said, all right, put an end to it. So we started with services, and a woman that I had working with me, she was responsible for working with this one client. Our job was basically to build out a website for them and also then create a marketing plan, an online marketing plan for their organization and how they're going to get the word out about who they are and what they do and all. And, so they paid us to build a website, and we did a whole bunch of other work for them, which they never paid me for. And then this woman who was supposedly working for me just couldn't come to the office every day. And I'm like, what's going on here? I found out that she took a job working for them. They were paying her directly, no longer responding to me or paying me. But then she kept asking me for her paycheck also. So I'm like, so she's getting double paid. And so it's just a mess. And I was like, I'm done. I can't deal with this anymore. I'm shutting the company down. I came home that day. I told my wife, I'm like, look, I'm shutting things down. I'm going back to New York. And
so at this time, you had Startup Saturday and Startup Weekend going on?
No, Startup Weekend came later.
Okay.
So during that time, I came back to New York for a while, and I stumbled upon Startup Weekend here in New York. I went, loved it. It was fantastic. Shane Reeser was the facilitator of the event. I met with Shane afterwards, and I said, Shane, I really want to do this in India. And he laughed. He's like, yeah, okay, whatever. I'm like, no, I'm serious. He didn't take me seriously. I kept pushing, kept talking to him. It was about 3 months of me going back and forth. And I just said, look, the Indian ecosystem has evolved. Before it was about just getting people together. Today it was more than that. There needed to be something actionable. There needed to be something that people could get out of an event like this. So we kind of went back and said, hey, this seems like the right thing to do in India for that time. And this is, late 2010. So eventually, he talked to Mark Nager and everyone else at Startup Weekend and said, all right, we'll support you in doing it, but instead of one event, you got to do 2 events. I said, okay, fine. So we said, we'll do Delhi and we'll do Bangalore. We had about 2 months to organize the events.
This is 2010.
This is early 2010. So January, we got the okay. Just, through Twitter, I met or chatted with somebody who introduced me to a friend of his, Chidambar Kulkarni. And Chidambar came on board right at the beginning to help me with Bangalore. And, Delhi, I organized myself sitting here in New York.
And what support was Kaufman, right? They were giving you.
Yeah, so Kaufman Foundation supported Startup Weekend at that time.
What were they giving you as support?
Just a little bit of money to kind of get it off the ground. And then, of course, there was all the logistical support, right? Like, how do you facilitate an event? What are things to expect? How do you handle these things? What's the process? Like, you need to get judges, you need to get speakers, et cetera, et cetera.
So you were doing this voluntarily. They were not paying. You're not getting paid.
Yeah. This was completely voluntary. I didn't make any money during this. It was voluntary. And the idea was, okay, how do we take the community that started out at Startup Saturday and kind of take it to the next degree, right? There were people who wanted to start a company at that point. They just didn't know how. So the whole experience of Startup Weekend was, how do you take the first 3 months of a startup and compress it into a weekend, right? How do you come up with an idea? How do you evaluate the idea? How do you hire your first couple of employees or your co-founder, all this other stuff. And the final evening was your pitch, right? So how do you pitch to investors, and what does the pitch look like?
It's what they call a boot camp today.
Yes, exactly. Yeah. So it was less of a technology and product-oriented boot camp and more of a entrepreneurial boot camp.
A process, packaging, marketing, yeah.
Yeah, exactly. And so, we kicked that off. The first 2 events were completely sold out. I got a couple of sponsors, not cash sponsors, but sponsors who would give like prizes to the winners. And the prizes were like, free credits to, our product, use our product. So we got other startups to provide credits as prizes to the winners. So it was kind of like, get startups, eat your own dog food, help other startups get some customers as well and some usage. So, that took off. That was,
I love it. Yeah.
That was, it was a great experience. And, it allowed me to, take what I was doing in Delhi and now take it across India. Right. And no one had seen anything like Startup Weekend in India before. It had become this, I think by 2012, it had become this rage. Like people just wanted to go to Startup Weekend, even if they didn't want to be an entrepreneur. It was just fun to like hack away at an idea and build something over a weekend. And, I tried to make it something that was very high quality in every way. So the venue had to be a high quality venue, right? Our first event was at the American Center. The second event was in Bangalore at Microsoft's office. The third event was in Hyderabad at ISB. Which is an amazing location. So, the location had to be great. The food had to be great. The speakers that were coming had to be people that you wouldn't necessarily get access to immediately, right? So, like Sanjeev Bikhchandani, who is the founder of Naukri, he was at the first Startup Weekend, right? He came, he spent the whole evening there as a judge and, hung out, had dinner, was mingling with all the participants and everything. And that's kind of why people got really excited about Startup Weekend, because it's like, I'm never going to meet Sanjeev Bikhchandani. I'm never going to get a chance to talk to him, but I could if I go to Startup Weekend, right? So, we were able to get luminaries and, whether they were VCs or founders or executives, we were able to get celebrities to come and, call it luck, call it, building my own network that allowed me to reach some of these people and say, hey, this is about the community. This is, if you could do it, we'd love your time. This is how much time we need. Could you come? By the time I left Startup Weekend in 2014, we had all kinds of people that would come and just like, oh, no, I don't want to come for 2 hours. I want to come and spend the whole weekend there. Absolutely. Rajan Anandan is a good friend. And, 2014, he said to me, he's like, no, I don't want to be a judge. I don't want to come for 2-3 hours. I want to come and spend the whole weekend working with these entrepreneurs and mentor them. I was like, dude, if you can spend that time, I love it.
Wow.
Please come. Right. So, it set a bar for experiential education that people really wanted to be a part of. And it also, that is the accidental path of getting into venture capital, right? Like,
yeah. So tell us. So next step, you landed up at TIL, right?
Yeah. So part of it was.
So now we are in. So you did Startup Weekend. You started in 2010.
2011. I started weekend, early 2011. And by the end of 2011, my network amongst founders had grown beyond Delhi to pretty much across India. Because of Startup Weekend. So between Startup Saturday and now Startup Weekend, I had a very good network amongst founders. And I met Abhishek Gupta, who had started at TIL. I want to say mid 2011.
So TIL, for our listeners, is Times of India Labs
It's Times Internet Limited.
Limited.
Yeah, so it's a division of Bennett Coleman, which is the largest media company in India.
Yeah.
And I had asked him if he wanted to. I had met him somewhere, and then I asked him, "Hey, we're doing a startup weekend. Do you want to be a judge?" He said, "Yeah, I'll come down." So he came down and became a judge, and he's like, "This is fantastic. There's some great entrepreneurs here." And TIL was starting a accelerator called T Labs. So he asked me, "Hey, what are you doing for a living?" I was like, "Well, nothing."
I'm fostering the ecosystem here.
Yeah, I'd love to get paid somewhere sometime, because it's been a long time since I've had any money coming in the door. And so he's like, "Look, we could use your help, and this is what we want to do." So I said, "All right, that sounds wonderful." So I joined T Labs in the beginning of 2012 in January, and we had our first batch at that time. It was a small first batch.
And by this time, you were already investing as an angel?
No. So I had, there was a couple of companies that I had met, and I was doing a lot more mentoring at that time. Part of it was like, look, I just didn't have the financial resources to start angel investing in companies. The second part of it was the whole angel investment space at that time was mostly controlled by angel groups in India, right? So whether it was
syndicates,
so Indian Angel Network, Mumbai Angels, a couple of these others, that's where most of the deal flow went early on, right? There weren't a whole lot of independent angels at that time. Most people did their deals through these networks. So, it was tricky to invest. So most of the stuff was like, look, you need help. Sure, I'm happy to help you, and I'll tell you exactly what I did wrong, and don't do these things. So I wasn't actually investing. By 2012, mid 2012, that's kind of when a lot of things started changing, and you started seeing individual angels go off on their own. You started seeing startups going outside of the angel networks, and you now saw people that weren't necessarily professional investors writing individual angel checks to some degree. So I started around that time when I was at T Labs to start angel investing. And
13 around 12, 13.
Yeah, 12, 13. And by October of 2012, 500 had asked me to come on board and help them build out their India strategy. And they had done one investment in India prior to that, MyGola. And then I joined in October 2012, and was there for a little over 4 years, 4.25 years.
So there you have it. How you become a VC? By doing good.
Well, it's an unconventional path. I think becoming a VC, the most conventional path is be a successful founder first, or work at a very successful startup. Well, or work at a very successful startup, and then get pulled into a VC firm. And then of course, go to a Harvard or a Stanford grad school, and then become a VC. I took the long, hard path to being a VC.
But I think you took the long, interesting path, and you helped a whole ecosystem on the way. So let's dig into that, right? So when people think about VC, what are they thinking about? Should we continue or?
We're significantly over time, but we can go for maybe another 5 minutes, maybe do one question, or if there are any questions from the audience.
Let's take questions. Actually, we can do. I want to get into the meat of your journey as an angel investor, but we just got to the beginning.
Yeah.
So maybe we come back to that.
Yeah, if there are questions, if people that are watching want to ask a question, feel free to jump in and ask a question. Till then, what was your question, Ritesh?
Yeah. So on the VC spectrum, when we think about VC, you think about, the investment in Google, which is $25 million, or the first check that Facebook got from Peter Thiel, so on and so forth. You hear about these fabled investors, but that's when a startup has built a product, has a team, has customers, has traction, and has gone through some very significant de-risking.
Yeah.
Right. And where you come in is literally the point of most risk.
Yep.
Where it is somewhere between there's a founder, he has an idea, or there's a founder and she has built a prototype, and maybe she has some initial customers trying it out.
Yeah.
Right? So you come in somewhere along those lines where they might have a product, they certainly don't have revenues or somebody paying them, right? So that to me is the most riskiest spectrum and the place where founders need a lot of help, right? So tell me about the first check you wrote, the first founder you met, and you were like, I gotta fund this guy, whatever it was, small check. What was that?
So there was no big bang moment. It was, the journey was a slow and gradual journey, right? So I'd been meeting founders while I was a founder. And then, through Startup Weekend, Startup Saturday, I was meeting founders constantly, right? And, some of them had challenges that were bigger than mine. Some of them were handling them better. Some of them, I didn't quite understand what they were doing. Like going back, if I look at, let's just say Bipin, when he was starting with MobiQuick and he was doing one of the first talks at Startup Saturday, and his video's up on, I think, my Periscope or my Twitter somewhere from back then. If I go back in time and I think about what he was talking about, like, we're building a mobile recharge business, right? And be able to recharge your cell phone, prepaid cell phone. Like, I never in my mind would have said, this is really interesting or exciting, right? Bipin was definitely inspiring and seemed like a great entrepreneur. But as far as what he was building, it didn't make any sense to me. I was like, how's this going to be a big thing? But folks like him and Vijay Shekhar Sharma figured that out, and they grew them into massive businesses over time. So all of those were learnings for me along the way without having to risk any capital, right? So okay, I met Bipin, back in 2010 or 2009, and here he is in 2014 or 2015, and his company's a unicorn or soonicorn or whatever. And what was that path, right? So
right,
that allowed me to kind of look back and say, okay, I met all these guys really, really early, and some of them were friends, most of them were acquaintances or people I've met once or twice, but I could at least see that journey, right? And I could evaluate what it took for them to kind of get there. So now, again, like most VC is pattern matching, right? Like, what patterns can you find there, and can you match those in new founders that you're meeting, right? And that's kind of where most of us start.
Right.
So you have that part of it, and then there's the passion side of it, right? Like, you meet a really amazing founder who's so inspiring and charming, and you're just like, wow, I want to be a part of this. So I didn't have any of the big bang moments where somebody just hits me over the head and I'm like, oh, I gotta give you my money now. It was more of, I'd met a couple founders, I'm like, and had spent time with them or to kind of help them with various things. Whether it was strategy, whether it was operations, whether it was go to market, some cases product, and over time. And then when it came around to them raising money, most of them came to me and said, hey, I'm looking to raise some money, and do you know anybody who might be interested, or would you be interested? And that's kind of how it started, where I was like, all right, yeah, sure, I've known you for some time. I've seen your progression. I'll write a small amount of money into the company, more as I want to continue helping you. And this is kind of my way of saying, all right, now I'm in, and this isn't like doing you a favor. It's more of my money's here, so I should help you so that I can make some money eventually, hopefully, maybe.
Right. So you've done about, I think it's about roughly 70 to 100 investments.
Yeah, somewhere around that. I don't remember the exact number.
And about 15, 20 exits.
Yeah, I don't remember the exact numbers. So to clarify, some of these are personal investments. Some of these are venture investments that I might have done at either T Labs or at 500 Startup, and some of them could be investments that I did through AngelList, backing other people's syndicates as well, right? So the 3 different buckets there.
Right. So what things do you want to see in a founder who comes to you asking for a check?
Okay. So I mean,
I know it's pattern matching, and there's no one rule that applies to everybody.
Absolutely.
And there could be some people who don't have this, and you would give them money for other reasons.
Yeah.
So there's no rule book for this. It's a complex process.
Yeah.
But let's just generalize.
Yeah.
And again, with the caveat that you could not have this and still be fundable.
Okay. So there's 2 different ways to answer this question, and the answer is different depending on which hat I'm wearing. If I'm a VC, I have a slightly different perspective.
No, as an angel.
As an angel, my perspective is slightly more different. When I'm investing as an individual, I tend to prefer investing in things I know something about. Partly because if, like for example, yesterday I saw a deal for essentially a new age, extremely healthy, something that you would really get excited about as a customer. Low fat, high nutrient drink, right? And I looked at it, I was like, look, it sounds really interesting. I just don't know anything about this business. I don't know anything about this vertical. I don't know how you manufacture this or distribute this or market it. I don't know how I could ever be helpful. So now, if I take that particular investment, if it was being done by somebody I had known for a number of years, or somebody that I had worked with in the past or something, I might be a little bit more inclined to say, okay, fine, I'll invest, but I'll invest because of you, the individual, and I trust you, the individual, and I'm ready to help you, the individual. So I'll give you a small amount of money, and that could be $1,000, $5,000, $10,000, to just say, look, here's a token investment just to help in some way. If that same deal is not being done by somebody I know, I'm less likely to get excited about that. Like, it's an exciting opportunity and it sounds really cool. I just don't know anything about it. I don't even know how to evaluate the deal to say, yeah, this is something that I want to put money in. Right. So I tend to focus on things that I can understand and wrap my head around and make sense of, or be able to help with in some way, whether it is being an early user or customer of the product and say, no, this doesn't work the way that it should, and this is how other people are going to want to use it. Right. Or, hey, I know people that could be potential customers or something like that, and I help in that sort of way. Or in an operational capacity, right? Like, I can understand how the operations for this type of business should be run, and I can help you set that up and do that, right? So I like to look at companies where I have some value to add, and I understand what the business is.
But let's go beyond your comfort level. Let's say you have comfort level. It's a field you know about, right?
Yeah.
What do you want to see
in the founders, in the team?
In the founder, in what the team, in what they have done? Let's say you don't know them from the past, so it's not a repeat serial entrepreneur. You don't have that confidence level, because that's a very easy decision. Yeah. If they've done something in the past, they had a good exit, or they did a very, very good startup, it still failed, but you know they did everything right, then you back in the team. That's a different equation.
Yep.
Let's take it out. You don't know them. They walk in the door, and before they walk out, you have made up your mind that you're going to fund this founder. She's worth funding. You just want to do some due diligence. What has this founder shown you that made you think that?
So there's a couple of things that have triggered that type of reaction in the past. Impact is one thing, right? Like, is what the founder doing impactful in some sort of way, right? If I think every startup is an impact business. And whether
you mean like social impact or
no, very broadly, like can something like this create significant impact and or disruption in some sort of way, right? I don't know what that is necessarily, and it differs business to business, right? But can this have this potential?
So you're saying, is it radical enough?
Well, yes and no, right? If you're talking about doing a TikTok clone, it's not going to be radical, but it could still be impactful, right? It can still affect a lot of people. Like, you build a version of TikTok that works on very low-end Android phones, right? Suddenly, it could be very impactful for people that are spending, $10 to $20 on an Android phone, right? And that's retail price. That's not a subsidized price. That's a retail price. But it's not radical. It could be impactful.
So impact, as you know what impact means, but impact.
Yes, and like I said, it's impact will be different based on what the company does, and then kind of me just saying, could this be impactful in some way, shape, or form? That's interesting to me. It really comes down to the team at the end of the day. Do I relate to the team? Can I sit and have a conversation with the team where I'm not looking at my watch and saying, hey, what's going on here? I want to get out. Let's speed this up. It can be about the product, right? Like, wow, this is just an amazing product that you guys have put together very quickly, right? So a lot of times it might just be like, that's the hook that gets somebody interested. It's like, whoa, 2 weeks ago you had this, and today you have this. Amazing, right? Like, how do you move so quickly? Right? Other times it could be about the overall market size, right? Like, that you're targeting. It's just like, wow, this is a huge market. And if you're able to just make a small dent in this could be a massive business, right? So it kind of depends on a couple of different factors. And, if it's a complete stranger that has not been introduced to me, that is pitching me on Twitter or LinkedIn or Facebook, and, then I start looking for certain things. I try to filter things out relatively quickly and just say, look, here's a form on my website, just fill this out. If it's something that looks interesting on paper, we'll set up a time to chat. After we set up a time to chat, if that goes well, okay, maybe what we'll do is we'll set up a weekly chat for the next couple of weeks, just for us to get to know each other and for me to kind of build out this
map, like a map of their.
It's like, it's a picture. It's a
model. It's a model of their.
Yeah, it's a moving timeline of what's happening in the business, right? Rather than snapshots. And even a couple of weeks isn't necessarily enough, but generally it's enough for me to say, okay, this looks interesting enough. Now, because I'm a small, irrelevant investor, if you're raising a large enough round, you're probably going to have a lead investor, right? Or even if you're not getting a lead investor, you're probably getting a bunch of other angels involved. Who are some of these people? Are they reputable? Are they notable in some way, shape, or form? So that social signaling also matters at some point. I might say, look, I'm interested. I will put in a small check, but my final decision rests on the final terms and who is leading with those terms, right? There's a lot of things that go into making a angel decision. And a lot of it also rests on, what is the overall view I might have on, macro conditions as well. If I think,
Sure.
All right, because this is money that I take out of everything else that I do to invest, right? As all angels do. So there has to be a pool of that capital that are comfortable gambling with, right? And when you angel invest in a startup, you are gambling, right? Like the chances of you making money on most of your investments is relatively small. If you can get 20% of your investments to be positive outcomes that are generating significant returns, you're doing great, right? Most 80% of the companies that you invest in are either going to be negative, meaning zero, or very small returns.
So, but I'm trying to drill down on the takeaway here for founders. So when a founder walks in and they're pitching an angel, not VC, because by the time they get to a VC firm, you're significantly de-risked.
Yeah.
You have traction, you have a team, you have a product, right?
Yeah.
And so I'm trying to create takeaways here for, what a founder should do, because the initial part is where I see a lot of founders wasting their time. You had mentioned on a previous podcast, people trying to file patents, do IP protection, right? One of the worst things you can do as a startup, like just don't do the startup if you're filing a patent. That's step number one. There's a very small number of startups in the medical device space or whatever where you should do that. So what is the takeaway here for founders, especially early founders? Because a lot of existing advice is around companies looking to go and raise a Series A or a Series A pre-seed from an established VC firm.
Yeah.
And those are dynamics significantly beyond on the risk spectrum, where the company has a team, has a product, has traction, has somewhat of a defined product market fit, if not perfect, but they are well on their way.
Yeah.
So when you look at it at an early angel stage, again, a guy with an idea, or maybe a founder and she has a product.
Yeah.
What are you looking for, and what is for you at the same time an anti-pattern? Removed from the macro, removed from these. So you told me, yes, you're looking for progress, some movement on a week by week basis. You're looking for impact, right? Which could be disruption, which could be an existing market causing some level of shift, a big addressable market. You talked about having an amazing product, but what else for you is like a pattern or an anti-pattern? Again, very early stage. You talk to them in a cafe. You met them for the first time.
So I'm going to change. I'm not going to answer your question exactly the way you're looking for an answer. Instead, I'm going to reframe it differently. I think the biggest problem that founders have when they try to approach angel investors is they don't know who they're approaching. They don't know what that individual cares about or looks for, right? So founders go in and shoot in the dark and hope that something sticks. There's so much information that angel investors put out on a regular basis, whether it's on Twitter, it's on Facebook, or it's on their blogs, or it's on a podcast they've been on. Do your research, right? Like that to me is the lowest hanging fruit that a founder should do. Do your research and understand who this individual is and why you should approach them to invest in your company, right? If you can figure out why they should invest in your company, now you can formulate your pitch on why they should invest in your company, right? There's no point in somebody who's building a dating app to come and pitch me. There really isn't. It's just not an area of interest to me. I've never been interested in it. I have invested in dating apps before, but that was as a VC, right? And again, my perspective as a VC and an angel are different, right? As a VC, I would still invest in that. But as an angel, there's no reason for me to invest in something like that. It's not an area of interest. So, do your research on the individuals that you are approaching. Shooting in the dark and throwing darts and hoping something sticks is not going to get you around quickly. In fact, people are going to be like, look, thanks for reaching out, but not interest. You're going to get more rejections that way. And I understand, increase the top of the funnel and go after as many people as you can and kind of filter it down, but you're going to waste a lot of time. If you put that time towards research, your funnel might be smaller, but your conversion rates are going to be better, right? So really try and dig into, look, some people don't have any information out, so it's harder. But those people that do have information in the public domain, research it, find out what they're thinking and what they're looking for or what they've invested in the past, right? Use that as a starting point to figure out, like, okay, I'm building a hardware device that does something, and this person has never invested in hardware, doesn't care about hardware, doesn't care about the vertical I'm in. Why am I pitching them, right? Why should I, just because they might write a check? Well, they're probably not going to write a check unless a friend vouches for you and says, look, I've met the founder, I know the space, I'm, whatever, just put $10,000 into this. All right, then that investor might follow along and say, look, somebody I really trust and I've invested with in the past, and it's always worked, is telling me to do it, so I'll do it. But if you come to me directly cold, it may not work because that's not something that I do or I care about. So a lot of what investors look for is out there in the public domain. Use that to gear your pitch towards that investor. The biggest problem that I think founders have is that they come up with one pitch deck, one pitch, and they use that. It's a one-size-fit-all type of scenario. You can't, especially at the early stages, right? It's about you as an individual and me as an individual, and we have to meet somewhere in the middle, and our minds have to match, right? And we have to say, yeah, I connect with you, you connect with me, I see where you're going with the product, with the vertical, with you as an individual, and it fits with my thinking. So yes, let's move to the next stage, right? So I think the biggest problem to solve for founders is do your research. You don't have to spend months on it. It can be done in days or weeks, right? There's so many lists that are out there today that talk about, here's, angel investors in this industry, that industry, blah, blah, blah. You can go to Signal, you can go to all these different places to get this information, pull it together, do something with it to say, all right, this is why, like what on my form, one of my questions is, why do you want me as an investor, right? And a common answer I get is, because, you're an experienced investor, you've invested in startups, and okay, but that doesn't tell me why I should invest, why you want me in your company, right? Like, I don't know anything about your type of business, right? I had another company that pitched me about, I actually haven't met with the company yet, so I shouldn't talk about it, but it had to do with packaging. I'm like, I don't know anything about packaging, right? Like, but
so what we're saying is find people who know about the space, who can literally be a mentor for you.
Not necessarily be a mentor, right? That's not, I never said the word mentor. I said, if you are a founder, and you are, right? You didn't go out to raise money, but if you were planning to go out and raise money, the first thing I would have said to Ritesh, listen, let's get a couple of lists together of potential angel investors that you should approach, okay? Not just random angel investors, but people that invest in your type of business, right? It's a SaaS business. It's a B2B business. It's focused on real estate, right? Like, let's target specific investors that like these verticals. It doesn't have to be all of them, but they like at least one or two of those criteria, right? Now let's build out that list. Let's find some information about, hey, and this might be hard, but what kind of check sizes do they write, right? Is it a $5,000? Is it a $50,000 check? Something in the middle, something bigger? Do they do AngelList syndicates, right? Maybe they write a small check personally, but then they do a larger syndicate, right? Let's pull this information together. And now let's try to find out, who do we know that can connect you to these particular individuals, right? Not like, hey, let's just grab this list off the internet and let's just start pinging them on Twitter, on Facebook, on email, and just saying, hey, I'd love to get 5 minutes of your time. That's not going to work.
Right.
Right. As a founder, you have to be more surgical and more tactical in who you're approaching and how you're approaching them, right? Because otherwise, you're just going to waste your time. Forget about what's going on the investor side. As a founder, you're going to put so much time following up with these guys. They're not going to respond. Like, okay, you're just going to keep following up. Okay. Instead, you could be following up with somebody who is interested in your particular business, or could be, or more likely to be interested in your type of business, right?
Right.
Maybe they're tapped out. Maybe they did all their investments for the year and they're like, look, you know, the economy's not so good. I don't want to write any more checks. That's a different story. But they historically have shown that they like a SaaS business. They like real estate. They, you know, oh, okay, it makes sense to approach them, right? So they don't necessarily have to be a mentor, but they have to be somebody that has a affinity for some aspect of your business, or have shown some sort of history of engaging in some significant aspect of your business. Maybe that was a job that they had, you know, 5 years ago.
Right.
Something. Yeah.
All right, folks, there you have it. That's probably, you know, the most valuable tip you'll hear in a long time. So if you're an angel, you know, review that answer a few times, and maybe, you know, reach out to Pankaj and answer his form correctly, and he might talk to you. So thank you for your time, Pankaj. This is very good. And
thank you, Ritesh. I appreciate you taking the time and asking such detailed questions about my past. It's now, you know, public record. I don't know how I feel about that, but it was fun.
Thank you.
And to everyone who is still with us, thank you guys for sticking around. This was definitely the longest live stream that I've done, and it was fun. To some of the folks that threw comments up, Arjun, hey, nice to see you. Great catching up. Danny, same thing. I don't know if I had a vision, but it was something. And Abhi, thank you again for watching. You're here on virtually every episode. I want to answer this question really quickly if I can. So, you know, specifically in India, and I think your question is about India. From the early 2000s to today, the venture industry has changed drastically. In the early 2000s, and definitely around the time that I moved in 2007, most VCs were doing more private equity types of deals, you know, more brick and mortar types of businesses, and less tech startup. You know, some food companies, hospital chains, things like that. So if you look at like older portfolios for, you know, some of the older VC firms, you'll find those types of businesses in their portfolios. Whereas around, I want to say 2009, 2010, you started seeing that change a little bit and moving more towards tech and what more of the VC industry in Silicon Valley has done. Check sizes have also changed quite a bit during this time. You know, in terms of protecting equity and limiting your dilution as founders, there are numerous episodes of InvestStream where we've talked about this. Also, the raise where we've talked about that. So, you know, check out the raise. That's something that we've talked about extensively on the raise. That's also on the YouTube channel. And a couple of the older YouTube videos that I've done, you'll be able to find them there. All right. And feel free to reach out to me directly if you want more information. And thanks a lot, everyone, for joining me. Ritesh, thank you so much for taking the time and doing this. It was a lot of fun. Next week, we're going to be doing an interesting chat with another colleague of mine, a former colleague, Arjun Dev Arora, who is the founder of Valence Advisory. We're going to be talking about how to get started raising your first early stage venture capital fund. All right. So join us next week on Tuesday, August 4th at 1:30 p.m. Eastern Time for a live discussion with Arjun. Thanks again, everyone. We'll see you again soon.